Hey everybody, Smart Silver Stacker here. Let's talk about why hard assets like this silver bullion that you see in front of you here are going to be king when the big bubble pops. Now, it's not just silver bullion, pretty much any tangible hard assets, gold, silver, real estate, tangible things that you can put your hands on. Those are going to be the assets to be in when this big bubble pops. And make no mistake about it, we are living through one of the biggest financial bubbles in the history of mankind. Probably the biggest, honestly. I mean, if you can think of a time when there's been a bigger bubble, let me know. But the combination of technology and financial trading and loose money policy by central banks around the world has really created this tremendous bubble that we're living through. And I was watching a video from Yankee Stacking, one that he put out recently. Shout out to Yankee if you're watching. Great videos you're always putting out. Always love to hear from you and Tim. And one of the things that Tim said in that video is that the biggest problem in the economy, or one of the biggest problems, is that there's simply too much money invested in thin air at the moment. And I couldn't agree more with that. And I believe that that is just a symptom of the broader problem that we have. We're living through this gigantic financial asset bubble. It's been building for many, many years, many decades, really. You can trace it back as far as you want. I mean, you can go back to 1971 when the dollar was taken off of the gold standard, when Richard Nixon ended gold convertibility. That's a convenient date to go back to. But really, even before that, all the factors that led to this bubble, massive amounts of government spending, debt increasing, that's what led to the end of gold convertibility. And so you can go back as far as you want with this, but right now we're living sort of in the terminal phase of this bubble, I believe. And the reason that the bubble has been inflated is because of the easy monetary policy by the Fed, and that too has been accelerating kind of in lockstep with the inflation of this bubble. I do just want to say a big thank you to today's video sponsor, SD Bullion. If you are in the market for some hard assets, check them out with the link down in the description. And there have been many mini bubbles along the way. If you go back to the tech bubble, the end of the 90s, that was one of the mini bubbles. And then that popped. What did the Fed do? They came in and they cut rates and they reinflated the bubble. They inflated the housing bubble, and then that popped. And then what did the Fed do? Well, they came in, slashed rates again, and this time they started monetizing government debt, buying up treasuries with the Federal Reserve's printing press, monetizing the debt. And of course, Bernanke promised that the balance sheet would get normalized. It was just a temporary emergency measure. But here we are, more than a decade later, and the Fed balance sheet is down a little bit from the all-time high, with the latest round of quantitative tightening, but that can only last so long. And the Fed still has more than $8 trillion worth of assets on its balance sheet. They reinflated the bubble back in 2008. They papered over the problems. They began monetizing debt. And then everything was okay for a little while. The can was kicked down the road. And then we saw what happened in 2020. And of course, everybody blames what happened in 2020 on the pandemic. At least, the powers that be. That's what you hear from them. Oh, this is all because of the pandemic. Who could have seen this coming? But the pandemic was just a needle. And you can't pop a bubble with a needle if you don't have a bubble first. And so there was just a bubble waiting to be popped, and that popped. And then we saw the response from the government and the central bank, the Federal Reserve. They came out and they just had a money printing bonanza. We're talking debt monetization, QE on a record scale, faster than at any point in history, massive expansion of the Fed balance sheet, massive amounts of government, quote unquote relief programs. We were even just sending out checks to the people. That was unprecedented. There had been a couple of stimulus checks in the past, but nothing like what we saw 2 years ago. And of course, the result of that was massive upticks in inflation that we're still dealing with to this day. And the bubble, it inflated huge asset bubbles, tech stocks, cryptocurrency. I mean, let's talk about cryptocurrency for a minute. Cryptocurrency was inflated into a tremendous bubble. Now, there's a bit of a rally now. I suspect it's kind of a sucker's rally in Bitcoin and other cryptos, but who knows? I mean, with speculative bubbles, anything can happen, right? Until they pop, they get bigger. So maybe we'll see it reinflated. Cryptocurrency, a lot of the easy money was driven into that because investors can see what is happening with the US dollar. That was one of the motivations for people to be getting into Bitcoin. It's an alternative to the dollar. Now, I believe that those investors, especially the ones who picked it up, near the all-time highs, they would have been better off putting those dollars into hard assets like gold and silver, not crypto tokens with no real use case. But part of that was a concerted effort to blow up the crypto bubble. I mean, look at the ads that were running, stadiums being named after cryptocurrency exchanges. I remember, there was like an ad with Matt Damon on Mars, the Wright brothers, and talking about how fortune favors the bold, and that's who gets into crypto. Of course, at the time those ads were running, Bitcoin was near an all-time high, and anybody who heeded the advice in those ads is still left holding the bag to this day, even with the recent rally. You don't see that for precious metals. When was the last time you saw an ad for gold or silver? Maybe during daytime talk. Television, you might see an ad for, a call-in show to buy some gold coins or something. More than likely, that's not really blowing up gold as an industry. It's probably just some kind of bait and switch scam. They call in looking for a gold eagle, and then they try to sell you some numismatic pre-1933 gold or something like that. So, you don't see the level of popular mania surrounding gold and silver that you have around cryptocurrencies. But I think that ultimately, when this big bubble pops, you may see that kind of mania towards gold and silver. Now, we're nowhere near that phase yet. I mean, I still think that for the vast majority of the population out there, if you're talking about stacking physical gold, they think you're, some kind of a throwback to the medieval era, or maybe you're a tinfoil hat wearing conspiracy theorist. I still think that a lot of that attitude prevails. Now, it's not as bad as it used to be. You've got, I think, close to 200,000 members over at Wall Street Silver on the subreddit. So clearly there is a subset of the population that's paying attention to what's going on. But we haven't reached anywhere near peak gold or peak silver yet. In fact, I think we're still very close to the bottom. This financial asset bubble, there's tremendous amounts of money invested in, as Tim said, thin air. Derivatives, quadrillions of dollars of derivatives out there. It's not really a transparent market, so it's hard to say exactly how many of those things are floating around out there, how much money is invested in that. But practices like fractional reserve banking, or in the current situation, banks being forced to hold almost no reserves or no reserves, loaning out tremendous amounts of money. The Federal Reserve keeping interest rates near record lows for a decade plus. All of these things have inflated massive bubbles. And to give you an idea of, how much the frame has shifted in terms of how we think about things, I mean, the Fed raising rates from zero was viewed as like a major hawkish event, even in the face of massive inflation. Even today, the Fed has gotten the federal funds rate up to what, like 4 and some points percentage, and they're talking about a terminal rate somewhere around 5%. I mean, historically, those are on the low end of the spectrum for interest rates, but the narrative is that by the Fed raising rates to this level, they're being hawkish and they're going to get inflation under control. But nothing could be further from the truth. The bubble continues to be inflated to this day, and like all bubbles, this one must come to an end eventually. But this one's a little bit different. It's not like the mini bubbles that have been inflated along the way. It's not a stock bubble. It's not a housing bubble. It's like an everything bubble, and it's a currency bubble. It's a bubble in the dollar. Ever since we were taken off of the gold standard in 1971 by Nixon, I mean, they've been printing these things like hotcakes, exporting them around the world, running up massive levels of debt. We've got $31.5 trillion in debt now. And the thing about the expansion of this bubble is that it's an exponential thing. I mean, look at the debt. Just look at the national debt and the rate at which it is increasing. It took about 205 years for the U.S. to accumulate the first $1 trillion in debt, and now we're racking up $1.5 trillion every single year. So this is not a sustainable path. There's projections out there, about how high the U.S. debt can go. Say, oh, it'll be 60 trillion by 2050 or something like that. The Congressional Budget Office, I think they're the ones that run the projections. But that's a pretty bold assumption to assume that this system that we have can last that long. because there are numerous threats to the dollar out there right now. There is a shift in global perceptions of the dollar following the recent weaponization of the dollar, the freezing of Russian assets. That kind of opened Pandora's box. And so the world is going to start moving away from dollars. Our ability to export our inflation and our debt around the world the way we have been for the past 50 plus years is going to be severely limited in the near future. And this bubble, I don't know what the pin that's going to prick it is going to be, but when the big bubble does get pricked, and there will be a point when it can't be just papered over anymore or reinflated, or if the Fed tries to do that, if the powers that be try to do that, they're going to not only reinflate the bubble, but they're going to absolutely eviscerate the currency. And that may be the way this thing goes. I mean, who knows? It's just that the stage has been set for a disaster here. And there's all this talk of, soft landings and things like that from the Federal Reserve. That is going to be nearly impossible to achieve, unfortunately. That's the sad reality, because the only way to avoid the hangover from a bender is to not go on the bender in the first place. And we have gone on the mother of all financial benders for the past 50 plus years. And at some point, you got to pay the piper. And when that day comes, there's going to be a shocking realization out there amongst the vast majority of the population, the folks who have no understanding of the difference between, say, fiat currency and real hard tangible money, gold and silver, the stuff that's been money for thousands of years. And, that's on purpose too. There's a reason that the educational system doesn't teach you the history of money. It's basically just a propaganda course for central banking. And there's a reason that they redefined the word inflation over the past 50 years too. That's not by accident. And there's a reason that you don't see stadiums out there getting named for gold and silver. They're getting named for cryptocurrencies instead. The vast majority of the population is being misled into thinking that something like a cryptocurrency is going to act as a shield for their purchasing power and it'll protect them from the devaluation of the dollar. But at the end of the day, imaginary thin air assets like Bitcoin, even like stocks, even like your bank account, numbers in a computer, that's not going to be where you want to have your assets when this bubble pops. You're going to want to be holding real things that you can put your hands on that don't have counterparty risk, assets that can't be inflated away, assets that central bankers can't simply create with the push of a button, because they're not going to stop inflating this until they're forced to by economic reality. It's like Ayn Rand said, you can ignore reality, but you can't ignore the consequences of ignoring reality. And we are fast approaching that point, I believe. When will it come? I have no idea. I mean, I can't time the markets. I don't have a crystal ball, but I can see that the stage is being set for calamity here, financial calamity. And it's unfortunate that more folks don't have their hands on hard assets like gold and silver, because that will be one of the few lifeboats available to those who want to avoid the coming financial disaster and want to avoid the consequences of this massive financial bubble that has been inflated over the past several decades. So this is just kind of a rambling video, just some of my thoughts on what's going on in the markets. Over the past couple days, there's been a bit of a pullback in silver, nothing too serious, but some profit taking likely. It's very normal activity in markets, but I view that just as a buying opportunity, because there's going to come a time when there's going to be a tremendous amount of fiat currency chasing a very small pool of real hard assets. And when that time comes, it's likely going to be too late to get your hands on this stuff. Everybody's going to want it, and there's only going to be so much to go around. So that's why I would rather be early to the party rather than late. And that's why I've been stacking, why I continue to stack. That's it for this one, everybody. Thanks for watching. Hope you enjoyed the video, and I will catch you next time. Smart Silver Stacker, out.